So I'm Julia Coakley, Head of Operations, and on behalf of the MGAA, I'd like to welcome you to our webinar this afternoon, which is being delivered by Great American International Insurance. Before I introduce our presenter, may I ask that during this webinar, you ensure your camera and your microphone is off. If you'd like to ask a question, please use the chat button at the bottom of your screen, which will be answered at the end of this presentation during the Q&A session. If we run out of time and don't have an opportunity to put your question to our speaker, this will be responded to post-event. This presentation is accredited for CPD points if this is relevant to your ongoing professional development. The video will also be available on our website and uploaded to our MGAA YouTube channel, and we will be sending out a copy of the slide deck post-event. Finally, please take time to respond to our feedback survey, which will be issued after this webinar, as this will enable us to deliver the best quality events to our membership. And finally, we will be issuing a poll to our members from Great International, so if you could respond to that, we would be most grateful. So today's webinar, an introduction to Great American International Insurance, is being delivered by Paul Dooley, European Division Marketing and Communications Officer and UK Commercial Director. Paul's role involves delivery and communication of marketing strategy across the European division, as well as driving cultural and brand elements for the business. From a UK perspective, Paul is responsible for the distribution strategy, relationship management, new product development, revenue and collaboration with the underwriting teams in delivery of new proposals and broker client engagement. Paul has spent nearly 35 years in the insurance industry across a variety of roles within insurer, MGA and broker disciplines. Originally trained as a construction and engineering underwriter, Paul moved through various assignments throughout his career and spent nearly 4 years as the Director of Insurance for Stobart Group prior to joining Great American in March 2017. So Paul, if I might hand over to you.
Thank you, Julia. And thank you to everyone who's taken the time out of the day to join today. I appreciate it. Let me move forward on some of these slides because Julia's done a very good job of summarising this, and just cover off a little bit about the learning objectives. So hopefully by the end of this session, you'll have a clear understanding of who Great American are, our corporate values, and you'll be able to summarise it. You'll learn about our core specialist products and how we can deploy these and help you grow your business and you'll be able to list our products. You'll hopefully have a clear understanding about our roadmap, partnership approach and distribution plans, and you'll be able to summarise it, and you'll have an awareness of our GREATpolicy quote and bind platform and be able to outline the benefits. So if I've done my job properly, by the time we get to the end, hopefully you'll be able to answer those questions. Okay, so a little bit about who we are. Some of you may have come across Great American, some may not. We're a little bit of a hidden secret. Our parent company was established in the US around 150 years ago, and you can see some of the numbers on the slide there. 70 billion in assets, 8.2 billion in revenue, and 8,500 employees with over 30 specialty and casualty divisions. And then as you come down that tree, you can see at the bottom there that Great American Europe are a subsidiary of the American insurer, with the listed business being American Financial Group, AFG. So as a result of Brexit, like many others, we had some decisions to make, and for many years in Europe, we had an Irish-based and regulated insurance entity, Great American International Insurance, DAC, and we made a decision to launch Great American International Insurance UK, which I abbreviate as GAUK, and that business was launched on the 1st of October 2019, and essentially what we did is we created a holding company in Great American Europe, and these three entities that you see on this slide here form the European division. So we are one division with 2 regulated insurance entities, one based in Ireland covering the EU and regulated by the Central Bank of Ireland, and the other UK headquartered in Bristol, regulated by the FCA, and the holding company providing unregulated services, so IT, HR, and all those functions. So that's a little bit about the structure. Busy slide. I'm not going to read through all of it. You'd be pleased to know you can study this at your leisure, but gives you a bit of a potted history of how the business has evolved. So essentially, 25, 30 years ago, Great American was established and focused on the leasing and finance space, providing insurance solutions to banks and large asset finance organizations across Europe. And then we've evolved from that to where we are today. And I'll cover that in a little bit more detail as we go through the deck. But you can see the journey that we've been on from this slide. So our purpose, as I've said, originally a specialist provider of tailored insurance solutions in the finance industry. Key customers, as I've said, were banks, leasing institutions, etc. And we've evolved our product line over the course of the last 4 years or so into other core specialist product areas, which I will address through the deck. And we will continue to expand into new product areas in the coming years, and we'll continue to speak carefully selected partners, and I'll cover off a little bit more about our partnership approach. Why choose Great American? Our people. I'd like to present that we are hopefully seen as talented, energetic and motivated to continue to expand and improve performance. I think in reality what you get when you speak to any of my colleagues at Great American, first of all, there's a very significant chance you'll be able to get hold of them, and you're talking to decision makers and people who've been in the industry in one role or another for many, many years. So we recruit specialists, we recruit product experts, and for Great American, from the top down, from the parent down, it is all about our operating results. Great American as our parent has successfully delivered for over 110 years, A+ rating, and we're one of only 2 US insurers to have been able to deliver those results. So everything for us is about underwriting profit. Sure, we're always going to be interested in significant volume deals, but that never replaces the need for underwriting profit for us. And the way that we address that on any new program is by understanding where we feel the combined operating ratio is going to sit on a deal, and that will generally be the driver for all of our original discussions. So what does the incurred loss ratio look like? We'll add a bit of OPEX in there, and what are the acquisition costs? And if we can come somewhere sub 90, preferably starting with an 8, then the chances are we're going to be interested to progress discussions. Some more about why choose us. Innovation. I think I would consider Great American a very prudent organization. You know, we're not on a 100-meter dash. We're taking very careful decisions for the longevity of the business across Europe, which complements what our US parent's done. But we will innovate. We will look at how we develop new products, how we deliver our service, and you'll hopefully see this in the coming months and years. Service is absolutely pivotal to us, and that kind of underpins some of the rationale about how we arrived at our distribution strategy. So in doing so, I kind of made the decision that we want to be able to be represented as leading service providers. We can't do that if we're spreading ourselves too thin. So consequently, we only trade with about 40 brokers and a handful of MGAs as it sits today. And we will very carefully progress our partnerships in the coming months and years. Entrepreneurs, so we combine a small company entrepreneurial atmosphere with big company expertise and economies of scale. You've seen the size of the parent, A+ rating. It's absolutely fabulous paper to be putting in front of a client, particularly in the way the market climate is today. And for me, I think this sums it up. If it's important to you, it's important to us. And if we can find a way of delivering a solution, then we will. And if we can't, we'll tell you quickly. A little bit about where we operate. So the red pins are clients all over Europe, the offices. So pre-Brexit, we had office locations in Manchester and London in the UK. Post-Brexit, currently they are remote working locations, and our headquarters is Bristol. You'll see we've also got the European headquarters in Dublin, and we've got operations in Copenhagen and Milan, with a planned future office in Paris. Bit of a quick example of who some of our client partners are, and you'll see some of these names on here are very significant asset finance businesses, but there's a whole array of different clients that have kind of come to work with us in the recent years and months. This is actually quite a good slide as a reference point for the future, really, for you. In one slide, this really sums up the core products that we're offering as it sits today. So in this bucket of 6, if you like, we've got asset affinity, scheme solutions, life-changing events, the leased equipment products, construction, bonds and surety, and professional indemnity. So I'm going to dip into these in a bit more detail, but if you ever wanted to go back and just have a quick look at what we do, this one slide really encapsulates that. So what is asset affinity? How does it work, and what are the benefits? As it says at the top there, asset affinity insurance solutions offer great opportunities for your clients to attract and retain more customers, enhance customer loyalty, gain competitive advantage, and generate potential additional revenue. This is essentially physical loss or damage based schemes for specific assets. As it says there, what is affinity? Asset affinity insures against loss or damage to a new asset or product following its sale, leasing or financing to the end customer by the sponsor company. Sponsor company being the retailer, the distributor, or the manufacturer. How does it work? So the asset affinity solution is marketed by the sponsor to its customer base. When the asset is purchased, the insured is the end customer who can make a claim to request the repair or replacement of the asset or product if a covered loss or damage occurs. And the benefits, the sponsor can offer a tailor-made insurance solution to their customer as part of their engagement. This allows the customer the opportunity to remove any burden of insuring under a home insurance policy or other policy type which may not fully protect the asset, and they may also have an excess to consider. Repairs and replacements are always handled by the sponsor, so this completes the customer circle, which is a distinct advantage. I'm going to give you some examples of how this works to try and bring it to life. This slide really just gives you a bit of an example of the types of assets that we'd be really interested to put a scheme around. So we start here, fine art, cycles, which is in huge growth mode, and we're looking at a number of new deals and onboarding a number of new deals for cycles at the moment. Tools, musical instruments, etc. You can read those for yourself. But there's a whole host of other things that we'd consider besides what's shown on this screen. And I think during COVID, there are certain assets that have seen significant growth. Anything like cycles, sports equipment, fishing, pursuits really have taken on huge growth for many of our potential client partners. Points to consider with asset affinity: minimum premiums. It's a scheme. So the facilities are aimed at high volume, low premium solutions or low value solutions. So basically, if you think of an asset that's worth less than 10 grand, we can do things that are worth more than that. But if it's worth less than 10 grand and there's a high volume of sales, then the chances are it's going to be right up our street and in our sweet spot. And we're seeking to generate a minimum annual GWP of $250,000. Regulatory: part of our assessment of any program, we'll carefully consider any regulatory matters in relation to the distribution to ensure it's fully compliant. You'd expect me to say that. It's incredibly important to us, and we've got some great past track record of putting these deals together. So we've got really strong understanding of that space. Technology: it's essential there's a platform capable of issuing documentation, handling premium collection, claims notifications, and issuing bordereau. If it's not available via the broker partner or the sponsor, Great American will utilize our quote and bind platform arrangements. So there's always a solution to be had. And claims handling, as I mentioned earlier, one of the key benefits to the sponsor is having the approved repair replacement of the insured asset or product, which completes the customer circle and ensures the customer engagement is intact. And that's always a key point for the sponsor company, particularly in the retail space. And this diagram just really kind of encapsulates how the relationship works. So a bit about a case study. So we had an art gallery who wanted to offer an insurance solution to any of its clients who came through the door and bought some art or sculptures. So we created a bespoke program offering complimentary insurance for the end customer for 30 days. So they walk through the door, they buy their piece of art, they walk out the door with full free insurance for 30 days. Client gains access to a policy which has been specifically designed to give insurance cover relevant to art collectors. A certificate is issued at the point of sale, and A+ rated insurance cover is provided immediately by us, thus providing a value-added service to both the art buyer and the gallery. Benefits for the art buyer, as you can see there: stress-free provision of insurance, immediate cover, and a value-add service for them. Benefits to the art gallery: client retention, additional income, and it differentiates them from the competitors. Now, what happens post this free 30 days, and this is just one of the mechanisms that we can use, post that free 30 days, the broker who's involved in this will do an automated follow-up with these clients, and the penetration rate is very high on this program, and it's a very profitable program. And there are, we've kind of diversified and issued another product which applies to collectors rather than the individual who goes in and just buys one piece of art. There's actually a broader offering which applies to collectors as well, and that product works exceptionally well. It's had claims. There's been good examples on there of why the product works well, but by way of example, that free period, that initial free period, is a good way of getting this up and running. Another example case study: e-bikes. So we put a facility together for e-bikes, and because these were leased, the client that we were dealing with was a leasing company, and they were quite keen to see the product extended to include early termination insurance. So if somebody early terminated on their lease agreement, those costs incurred through the early termination were going to be picked up. So we were one of the only insurers who came to the party with a physical loss or damage solution and were able to write the early termination risk. E-bikes generally, I'm sure many of you have seen in the press the huge growth in e-bikes, and particularly cycles and e-bikes through the pandemic have seen enormous growth, with availability being the big issue for distributors now. But this is set to grow and will continue to grow. And as I said at the top of the presentation, we are implementing a couple of other new deals right now and looking at a number of others. It's a very significant sector for us. And with Asset Affinity, you know, this can be delivered as a free period basis, or it could be delivered as an optional purchase, or it could be delivered as a mandatory included product at the point of sale. But however we look at this, when we structure this, we always keep the retailer away from any regulatory issues. So it's always done in a very compliant manner. Life-changing events. We've got a whole suite of products in this bucket. So what are life-changing events insurance products? Life-changing events is the term used to categorize insurance products designed to protect financial obligations or repayments or other financial loss as a result of, and then I've listed there, accident, illness, redundancy, or other life-changing event, e.g. expatriating or maternity, paternity, adoption. So this is essentially ASU, accident, sickness, unemployment style driven products, albeit unemployment was put on pause at the time of the pandemic. I'm sure that won't come as a surprise, and we will come back to that space, and we'll carefully consider the right time to do that as things become clearer in the wider macroeconomic situation. So what are we looking for here? Again, high volume, low limit, low volatility. So it could be a group PA deal, or I'll get into some examples now of some of these other products as well. I'm sure you'll all be familiar with personal accident and sickness. So we're looking for group PA structured business, credit and income protection. There's a boatload of opportunities with this product, and it's driven by those previous triggers there, whether it be accident, sickness, maternity, paternity, and I'll give you some case examples in a second. Overhead expenses, early termination and gap, and excess protection. So the slides now go into some examples of this. So group PA, so an example here, we looked at a very significant delivery company with self-employed riders providing group PA. So we put an alternative solution together for this customer, and some other additional extras were factored into that, which were things like a health and wellbeing hub, which was white labeled to that client, access to GP 24/7, doctors, physiotherapy, counselling services, and also IntelliZ, global asset recovery device, which I'll talk a little bit more about in a second. But we always try to see how we can flesh out our offering to make it really bespoke and fit that client's needs and add a bit of value. Next example, in credit and income protection, there's a whole bunch of scenarios where this product can work, but if I give you the first example there of gym subscriptions, so let's say you've got a David Lloyd Leisure Group or something of that ilk, who want to be able to offer to their customers the chance to have their monthly subscriptions paid in the event of accident or illness. So they can't come to the gym, they can't make use of their membership. They'd still normally have to pay their monthly membership fee. In this case, with this protection, we would pay that monthly membership fee until they were fit and well again. And it takes away that that problem for the leisure group to have to pursue that customer through the agreement that they've got with them. So it actually works all ways round. But there's some other examples there of where income protection will work well. Parent Protect is one of our most recent products, and I think this would work extremely well in the employee benefits space or with large affinity purchases. And this is essentially designed to provide working parents with continuous pay in the event that they have a child who's off sick with one of 12 serious illnesses that we list. So it's the nasty stuff that's listed in there. It does happen, sadly, but again, this eliminates any of the stresses that could exist between the employer and the employee, who's continually taking time off to look after the child. So this is why I see it working really well as an employee benefit add-on. And then those additional extras that I mentioned previously are still available here. Overhead expenses, relatively new product. We launched this recently in the EU, actually for a client in Italy. So it's something that I'm looking to bring to market here in the UK. And it's being sold on the back of a professions PI book. And it's intended to apply to professions. I've given some examples there: doctors, dentists, chiropractors, physiotherapists, could be consulting engineers. So it's not aimed at construction trades. There's no medical rating with this, and basically what we're looking to provide is an indemnity for the overheads of the fee earners of that business. So it might be that you've got 1, 2, 3 fee earners in a business, and one of the fee earners goes out the weekend, has an accident, can't come to work, can't earn his fees, but that business has overheads, be it premises, be it staff or other. That's what this product is designed to protect. And one of the opportunities that I see is to cross-sell this on the back of a professions PI book. So this is kind of in work in progress at the moment, but I'm pretty hopeful that we can get this launched as we go into 22. Early termination, insurance and gap. So we're being kept incredibly busy in the early termination insurance space at the moment, and I'm not particularly aware of many other insurers who are in this space. So a couple of examples. salary sacrifice, which I'll cover over the next 3 slides, is providing a significant opportunity for people to acquire an electric vehicle with some pretty significant discounts through the SALSAC model at the moment, and the risks that presents to the employer are that the employee decides that, having ordered this car, a few months into it, they leave the business. So the employer is not in control of that resignation piece, and as a result, they're going to incur an early termination charge. That's what we're picking up, and the same is true for bicycles as well. So we've just partnered with a significant UK retailer to provide them with an early termination support on their SALSAC arrangements that they have on bicycles. But this could work in any situation where there's a finance agreement with an early termination penalty. So very broad scope. Gap, we've long been in the gap space, but we took a really conscious decision to not engage too heavily on the private car gap space, largely driven by the regulatory considerations there, and also the very high acquisition cost models that were in play. We just couldn't make it work. So unless we see a radical change to that, I don't see that car gap in the immediate future is going to be something that we'll be opening our arms to. But certainly we write gap programs for commercial vehicles, construction equipment and agricultural. So that's just a little bit on the gap front. And the next few slides, I won't go through all of this now, I touched on it briefly there. This explains and gives the background to salary sacrifice. So this should tell you all you need to know about what is salary sacrifice, what are the risks to the employer, and then what's the solution, how we can help. So typically with this, you'll see fleet managers coming to us with a request from their commercial or corporate clients wanting to de-risk themselves of the resignation risk and pass that risk off. So as I say, very, very busy in this space right now, largely driven by the fact that the benefit in kind rate is only 1%. So there's a saving of 40 to 50% on the purchase of a new electric vehicle. Excess protection does what it says on the tin. This reimburses the excess that's paid under the primary policy. So we're currently supporting one MGA partnership with this solution, and it applies across a broad range of personal lines and commercial lines products. So it's not limited to the products that I'm talking to you about today. So could be a commercial combined policy, could be a contract works policy, a whole boatload of stuff fits into this, but essentially it's just reimbursement of excess up to 2.5 grand, and it works particularly well in the SME and personal space. And Excess Cover Company is the partner that we're supporting. They can provide access to their platform and structure arrangements around commission share, or if somebody has a program with some historic data performance that they want us to look at, they're more than happy to do that. I think this product is a no-brainer. What client doesn't want to insure their excess? The next few slides deal with our background in the finance space, asset finance. So I'm not going to labour on this because I'm not too sure how many of you will come across this stuff. We've been very active in this space for the last 30 years. But I would just say that if you come across any asset finance businesses who are involved in funding anything other than planes, trains, aircraft and ships, so what we're aiming at here is office equipment, shop fit outs, IT, photocopiers, that kind of stuff. This is a huge space, many billions of pounds of new inceptions every year in the UK and across Europe, and we're basically protecting the asset finance company, and it's done through a contract waiver solution, and this also generates very significant revenue returns for the asset finance company, with some fairly significant benefits to the end lessee in here as well, I might add. But I would just say on this product, if any of you feel that there's an opportunity in the asset finance space, then just reach out. And this kind of goes through the kind of considerations that we have around this. There's the team. So Brendan, my colleague, heads up the Affinity line, and then he's ably assisted by Steve Hewitt and Charles Madron, who come with many, many years of experience across these lines I've just mentioned to you. Construction and engineering. So we launched construction around three or so years ago. And as you can see from this slide here, we break this down between single project, contractors all risks or erectional risks, annual open, CAR or EAR, contractors plans and equipment. And we have a fairly broad appetite, although it must be said that our team of 3 in the UK and team of 1, soon to be 2 in Europe, clearly we're building a book of business. So we're not going to want to get involved in very high hazard trades. And I've given you some examples in the avoided trades column there. So heavy civils, tunnelling, timber frame construction is something that we can look at, although we would generally have sub-limits on that. And I know there's a very strong driver from certain quarters for the insurance industry to start looking at timber as a renewable source, but this stuff burns, so there's a lot of work to be done to convince insurers, I think, on timber. But if it was timber frame housing, decent separation, we'd probably be quite comfortable with that. If it was a large structure, timber only, we may have a different view. But we've got a very broad appetite when it comes to trades. We can write single projects up to 25 million limit and annual opens with a 10 million limit. And we've recently just launched the new quote and bind portal, aptly titled GREATpolicy. Spent millions of pounds developing that name. Can't think where we got that from. But this is just recently gone live, and it's an absolutely fantastic platform. There's a bit of a summary here on screen for you. When we designed this product, what we wanted to do was put together a very comprehensive single project wording, the kind of wording that you would see in higher value projects, but bring that down. So anything that's sub 5 million in contract value can benefit from a very broad wording. Now, typically what happens where a commercial client is having a extension, renovation to their existing property, often what people do is they try and lever this into the existing property policy, which isn't necessarily the right home for it. And there are all sorts of considerations when it comes to the contract conditions that are in place for the particular contract. Now, generally JCT contract conditions will call out for joint names insurance. There could be lenders clauses that need to be recognised. We've addressed all of that as part of this product. You can actually get a quote indication within a minute, and then with some more information, you can refine that quote down. There's a mandatory section, which is the contract works, and then the optional sections of third-party liability, non-neg, terrorism, delay in startup, which we think is a real benefit on this online quote and bind portal, and also contractors plant. So those are all the other optional sections, but it's in the control is in your hands with this, and the premiums start from £500. So it's the first, in my knowledge, the first single project quote and bind platform in the market. So we've had some exceptional feedback on this platform thus far, and our construction team are using it, and it's delivering what it says on the tin. It's very efficient. I touched on this organisation before, IntelliZ, and you'll have seen from one of the earlier slides that we write contractors, plant and equipment, albeit our preference would be to do that in conjunction with contract works. Contractors, plans and equipment standalone carries its own problems, and it has done for many years with theft, also malicious fires, but predominantly theft. Something like £800 million of plant goes missing every year in the UK. I think that's slowed down a bit during the pandemic because of some of the border controls, but where there's a plant opportunity and where there's an inquiry, really the way that plant owners should be looking at this now is that they need to have some form of physical and or electronic detection. What I really like to, and there's a bunch of electronic detection and tracker systems on the market, all do different things, but the difference with this particular product is that it doesn't require a monthly subscription. It's the only tracking system that doesn't require a monthly subscription, and it's actually really affordable. And it's small, it's about the size of a ring box, and you can hide it in your car, in your contractor's plans. It's got a whole series of applications, this device. But it's just something that we've negotiated a commercially incentivized rate. So where there is no current security in place, we might look to offer something like this as a bit of an extension of the insurance offering. And there's the lovely construction team in the UK, headed up by Alec McFarlane, ably assisted by Adam Harper and Mark Holmes. These guys are based in Manchester, but very accessible. And I think one of the things I hear continually as feedback from our current partners is they can get hold of these guys and they can have meaningful, sensible conversations. And I know that to be true. I know these chaps very well. Very strong team of construction underwriters. Surety bonds and guarantees. Very quickly on this, we have one guy who you can see on the screen there, Ian Bird, who heads up our bonds and credit offering, and we'll be looking to flesh this space out in the coming years. But we've historically offered solutions in the commercial bonds and travel bond space. We've recently, during the last year or two, entered into the construction bond space and done a number of new deals. And we're quite keen to grow in this line, but our distribution at the moment is primarily only via MGAs, because essentially we need that partner in place, because with one man controlling this line at the moment, he'd just be inundated otherwise. So we tend to structure an agreement around rating. It's not necessarily a full DUA, but there's some agreement around rating and risk acceptance. But we're also looking to deliver some new products during 2022, so performance guarantee style products, payment bonds and that kind of thing. So still relatively early days for us in this. It's a very successful line of business for Great American, and it's a great way of deploying our A+ capacity. And similarly, the most recent product that we launched in May of this year was professional indemnity. And our approach here is very similar to the bonds approach, in that we're controlling the distribution quite tightly at the moment, in that we're looking for MGA partners or broker partners who can deliver affinity-based schemes opportunities, really. So we're supporting one partner at the moment with excess of loss capacity, and we'll slowly build up our offering to other parties, to other distribution outlets as well, other MGAs or brokers. But we can offer primary and we can offer excess of loss. Currently 3 million is our exposure limit. That will hopefully stretch to 5 in the coming few months. But I think that the benefit here is that we're legacy free. We haven't got any of the issues that many of the existing PI markets are dealing with. We've got a very experienced head of PI, and essentially if we can find a schemes-based opportunity, and the example I've shared on the screen there, it might be a trade association, it might be the Association of Tax Accountants, or something else with sufficient numbers in the membership that would make up a decent scheme for us to put together a bespoke PI offering for their members. That's kind of how we want to do it. We're not an open market PI market as it sits today. We just get absolutely swamped if we did that. And you can see in the avoided trades what we're not doing at the moment. So new entrants this year. So we'll build our product through these solutions over the coming months and years. And there's Lee Hudson, head of PI. So why work with us? Bespoke solutions, I would represent. We've got extensive experience of providing tailored solutions since 1986. I've touched on the narrow distribution strategy, proven track record of over 25 years in the UK and Europe. Our clients include many pan-European blue chip companies. We have a broad team of specialists as well as dedicated multilingual service centre. From a partnership standpoint, I know it might be easy to read this on a screen, but it is genuinely true. Our ambition is long-standing sustainable partnerships. We're very careful about the selection of our partners, and it's worked very well for us thus far. So we are all about building long-term relationships. It's what we do. And quite clearly the A+ rating, which is pretty important right now. So what else can you expect from us? Service-minded. I've touched on it before. I kind of have a thing that if I'm dealing with somebody, I expect good service, and I sincerely hope that that's what you see from us. You'll get responsive service from locally placed individuals you can trust. You'll have access to decision makers in the field. We're an extension of you and support your relationship with your broker clients or the insured. Solutions driven. We don't just write policies. Our focus is to help you find the best insurance solutions for your clients, to write profitable business and capitalize on opportunities. You will engage in an unparalleled dialogue with our team that is based on our deep-seated knowledge of the sectors we're involved with, and specialty focused. Team has been assembled to represent the best expertise in the sectors of business we transact. So you'll get dedicated focus to whichever class of business you choose to discuss with us, and expertise you can depend upon. So I'm representing here that in the space that we operate in, we're a very specialist focused insurer. I'm sure you've seen that through the presentation. We know who we are, we know the direction we're going in, and hopefully that's the experience you'll have if you speak to any of my colleagues. So what is the roadmap? Well, first of all, we want to be recognised by our clients and partners as a source of excellence, service, products, advice and creative solutions. We'll continue our diversification and significant profitable growth through expansion of our product range, territorial coverage, distribution channels and client type. Partnership approach. We value long-term profitable partnerships, and this is what we aspire to achieve for many years to come by building solid relationships and delivering service excellence. And the distribution plans. Current distribution is split between direct, broker and MGA, and we will only trade with a small number of brokers and MGAs in the UK. This will clearly add value to any of our partners being able to access our A+ rated paper and suite of specialist products. So there's no immediate plans to have any significant divergence on that distribution plan. So back to the learning objectives, just conscious of time, and I know I've whistled through some of that, but hopefully you've got a better understanding of who we are, what our corporate values are. Hopefully I've given you enough to give you a bit of an understanding of our specialist products, how we deploy them, and how there may be some ideas in there to help grow your business with your partners, and you can hopefully list some of the products now. You will be able to when you get the deck anyway. Have a clear understanding about our roadmap, partnership approach and distribution plans, and I've covered that off in terms of where we're going over the course of the next few years. So it'll be a very focused, steady growth for us. We're not rushing to launch loads of new products. It will be steady as you go, but there'll be derivatives in some of those product lines as well. And have an awareness of our GREATpolicy quote and bind platform, and I've touched on that through this slide deck. So hopefully I've addressed all of those key learning objectives as part of the presentation. So again, appreciate it was a bit of a whistle-stop tour. There's a lot of slides in there. I know, as Julia said at the start, the deck will be made available to you, and I'm happy to take any questions now or follow up after the webinar. Thank you.
Thank you, Paul. That was great. I particularly liked, I quite want to steal it. If it's important to you, it's important to us.
You can't have that. I'm sorry. That's mine.
No, has that been copyrighted though? Because if it's not, I think we've got dibs on that. No, thank you for that. It was really interesting. I've got some questions. The first of which being, Paul, any more guidance on A&H? This is an area of growth interest here.
Yep. Yeah. Well, the guidance would be that we're probably fair to say we're not a market to write individual A&H policies. Hopefully I made it clear through the presentation that we're really keen to work with people on A&H solutions, but really where it's an affinity or a group purchase. So if the volume's there, if there's data there to support an opportunity, we'd be keen to work with you to provide a solution and see how we can either just focus on the A&H piece or make that a stronger proposition with some of our other life-changing events products. So I'd be very, very keen to talk if somebody's keen to drive that line.
That's cool. Another question. Do you provide unemployment cover as part of the life-changing events product offering?
So as I kind of touched on during the presentation. That's on hold directly as a result of the pandemic, although we are reviewing it regularly against the backdrop of economic reports. I think in all likelihood we will start to make a re-entry probably during Q1 of 22. But it's based on the specifics of each inquiry as well. So what sectors are we protecting here? And some are more exposed than others, as would be evident from recent press reports. So we will come back to it, but currently it's not something we're offering today.
Thanks, Paul. What are the key decision-making factors for a new deal for Great American? I don't know, is that one that you can summarise?
Yeah, good question. I think data is always good if it's available. If it's a greenfield deal, it's a new opportunity. That's fine. We're happy to look at new opportunities, of course. But where it's an existing opportunity, if data is available, that it just short circuits the whole analysis process for us. So profit's king for us, as I mentioned during the presentation. So if the deal has a chance of hitting our combined operating ratio metrics of sub 90, when factoring in the acquisition costs, incurred loss ratio and OPEX, then this would be a good starting point. So it's very easy for us to evaluate whether a program is going to work for us if we've got good data. If the data is not available because it's greenfield, we'll draw on our own expertise in that space.
Thanks for that, Paul. So I suppose in a similar vein, what's your view on emerging technology and risks in particular? Do you see opportunities for Great American?
I do. Again, another good question. There's a whole host of things happening right now, and we've written a couple of thought leadership articles on some emerging technologies of late. I touched on it in the presentation, but electric vehicles with salary sacrifice is keeping us very busy, and you could roll that over into EV infrastructure as well. So there's going to be a considerable investment into electric vehicle infrastructure. So the new forecourts of the future, there's masses of investment going into this. And, you know, for me, I see that as an opportunity for contract works insurance, whether that's developer-led or funder-led. So something that I'll be looking very, very closely at. Same with the e-bikes scenario I mentioned in there as well. And so you've got the early termination exposure, you've got the physical loss or damage risks of that. And then I was reading recently the government's report on the investment into the hydrogen infrastructure space. So again, early days with that, but I think that will present equally sizable opportunities in the construction space for new hydrogen infrastructure as well. And then there's a whole host of other things that are coming down the track as well. But right now we see that as masses of opportunity for us.
Thanks, Paul. Another question. Do you have a maximum commission range?
Yes. So it would vary by product line, but typically if we were writing affinity business, PI, I would say that we'd probably say 30 to 35% is kind of where we want to be. Construction, our objective there is to try and manage the acquisition cost ratio to 23%. So we obviously can write net, and we've done a number of deals net where the MGA involved has just charged a fee. So that it's a good route for us because it kind of takes out the acquisition cost from our core calculations. So previously deals that we were unable to do, we can now engage on, because if we're only factoring in the MGA's commission or the MGA's fee structure, then that makes that a much less challenging calculation from a combined operating ratio standpoint. We're still going to pay close attention to the ultimate outsell price in terms of all the fair value regulatory communications that have come around, so we're not ignoring that, but it does make it a more writable proposition.
Thanks, Paul. So I'm not sure, did you put your contact details on your slide deck, Paul? So I've just got a question if I've got an opportunity to discuss Great American. Perfect. So hopefully that answers the question of who's the best person to speak to.
Yeah, afraid it's me.
Great stuff. Well, they're highly ranked, I'm sure. I've got no other questions. So just to our delegates, we have got a couple more minutes. If you did want to submit any more questions while we've got Paul on the line, please feel free to do so. I would say at this point that we will be promoting our capacity exchange shortly, which will almost certainly happen in November. So this would be an opportunity, hopefully, to see Great American at the capacity exchange, where we can get together our MGA members and our capacity providers to make introductions. I think it's been deemed as a bit of a speed dating type scenario. So no big deals discussed, but as I say, certainly an opportunity. So hopefully we'll see you there, Paul, and some of our delegate members as well. If there's no further questions, I think it just leaves me to say, Paul, thank you very much for your time today. There's a lot of content on the slides, but you know, you've made it very evident that Great American are very, very keen to have these conversations, and I'm sure our members will take full advantage of that.
Yeah, I'd just encourage people once, because there is a lot of information in that deck, and there are an inordinate number of other case examples that I could talk through. If anyone wants to circle back, if something isn't clear, and I don't mind those conversations, I would much rather have them than not. If somebody wants to reach out to me because they have something that they think might be of interest with one of their partners, then please do.
That's reassuring. Just got a final question I think we've got time for.
Yeah.
Hi, Paul, do you ever consider fronting opportunities?
Sadly not. We're asked about this quite frequently, given the state of the market right now and reduction in capacity, as you can imagine, but it's not something that Great American do in terms of how we deploy our capital. So sadly not. Co-insurance is fine, but fronting, no. Okay, thank you for that very succinct answer. So again, Paul, thank you so much. Thank you to Great American as well. We do appreciate your time. As I say, we hope to see you at the capacity exchange. So I'd ask our delegates to look out for the promotion of that event. It just leaves me to say thank you very much for our delegates taking the time to dial in, and I wish you all a great afternoon. Thank you very much. Thanks, Julia. Thank you.
Thank you.